Hello and welcome to the second episode of Stock Talk. I'm Michael Cannon. This is Ian Hardacre. Before we get on to our second stock, we want to do a quick recap of our last stock, which I like to think was a pretty successful pick there, Ian. What can you tell me?
Thanks, Mike. So our first talk was on Park Lawn Corporation. 2 weeks after we published our video, Park Lawn Corporation received a takeover offer from institutional investors at about a 55% premium. So obviously we were pretty happy about that. We'd owned it in our small mid-cap fund. And given our investment style with a value orientation, when other investors come along and decide that the stock's grossly undervalued and we own it in our fund, we feel like we've done a great job. So we're really pretty happy about that.
Great. So second stock, also in the small and mid-cap fund, Dentalcorp. What can you tell us about that?
Yeah, so Dentalcorp, as Mike mentions in the small mid-cap fund, they own 550 dental practices in Canada. Pro forma revenue is about $1.5 billion. We really like the dental business in Canada. 75% of people go to the dentist once a year. Per capita spend on dental care in Canada continues to rise. It's risen every year over the last decade, with the exception of 2020, and that was because of COVID. And it's a consistent business. It's effectively pretty well recession-proof.
So Ian, my understanding is that the industry is rather fragmented. How does that play into our thesis?
Yeah, absolutely, Mike. So the growth of Dentalcorp is mainly through acquisition. They did 26 acquisitions last year. And as we all know in Canada, it's a very fragmented industry. So there's a lot of dental practices. They really target practices that are growing. They may have 2, 3, 4 dentists in that practice. Once they acquire their practice, it allows the dentist to focus on dental care and them to help on the business side of the business. So they're very successful at it, and we expect them to continue to do it.
Great. Valuation, always something that's incredibly important when we're thinking about buying stocks. What is the valuation of this business?
Yeah, absolutely. People watching know valuation is important to us. What we pay for a business is very important. It's about 8 times enterprise value to EBITDA, which is one of the metrics we use. And it's generating about $125 million of free cash flow this year, which is very important. The free cash flow can be used to pay down debt or can be used to acquire more businesses. And I think it'll probably be the second of that. They'll probably acquire more businesses.
Great. Well, thank you for joining us. And if you would like to learn more, please visit us at bridgeportasset.com.